Hello folks, welcome back. This is Carries Trading Institute, and today I'm going to take you through a price action review of what we have seen starting from this week and going into today, Friday, the end of the week. Alright, I want us to go through what price action has been doing so that you really get to learn how to approach the markets from an institutional point of view, and especially if you're trading smart money concepts, this is really for you. And even if you are not trading smart money concept, I need you to stay till the end of this video so that you learn how to approach the markets from an institutional point of view. All right, I need you to learn how to approach the markets from a smart money point of view so that you can increase your profitability curve at the end of the lesson. All right, so quickly, the first thing we do every time we approach the chart, and irrespective of the asset you are trading, if you are trading Euro USD, GBPUSD, NZUSD, or any dollar associated pair, it's necessary for you to analyze the benchmark asset, and the benchmark asset is usually the dollar, alright, because the dollar is the main driver. That's where we see interest rates reflecting technically. Alright, so if the direction of the dollar is bullish, it has a relationship with all foreign currencies. Therefore, foreign currencies will go bearish if the dollar is bullish, and if the dollar is bearish, foreign currencies will go bullish. Why? Because they have an inverse relationship. Alright, they have an inverse relationship. So the first thing we do is to determine institutional order flow of the higher time frames. Alright, higher time frames like the monthly, weekly, and daily time frame. That is what tells us what the directional bias is on a weekly basis, on a monthly basis, and on a daily basis. That's how we know what price action is saying. Alright, so if we are able to come into conclusion of a directional bias on the dollar, then we can now go ahead to analyze the underlying assets we intend to trade, like the GBPUSD, the Euro USD, the NZUSD, and or any other foreign currencies that you wish to trade. I always emphasize that it's important you learn to stick with one currency pair, at most two, so that you improve your performance and efficiency. The more you stay with one of these charts, you are going to develop intimacy with the chart. You are going to develop a high level of relationship with the chart that helps you read the reading beyond just technical analysis. There is a reading behind it. You can literally feel it. It's called the intuitive dimension of trading. Okay, so quickly, on Sunday we analyzed that from the weekly time frame that we were anticipating the dollar to go bullish. All right, and why was that? Because we saw liquidity taken below here, which is sell side liquidity. Price traded into a fair value gap here, a discount fair value gap. All right, if you don't know what I'm saying, you may need to watch some of the live sessions I have recorded. All right, so dollar traded into that fair value gap, okay, or discount fair value gap, and then we saw that expansion to the upside. Then we saw it repriced into that bullish order block right here, or you can call it or the rejection block. Okay, price traded into it the previous week, and this fast or sharp rejection to the upside tells me that there might be a seizure of sell pressure. We might start to see price trading to buy side liquidity residing above that high, that old high there, and the sell side imbalance, buy side inefficiency, the fair value gap right here. All right, that was our expectation when the week began. Okay, so we're expecting that this week was going to open and possibly trade lower to form the low of the week and start to trade up to clear out buy side liquidity. All right, so we went to the daily time frame, and on the daily time frame, this is what we had. All right, price swept liquidity here. There's a shift of market structure that created a breakout block. Price returned into that breakout block right here. Okay, so you can see after price swept buy side liquidity here, traded into volume imbalance right here. Okay, volume imbalance here is a price action where only the candle wicks are involved. The body of the candles creates the gap. That's a volume imbalance, as you see here. Okay, if you take your time to see it here, you'll see that the body of the candles created the gap. Only the wicks of the candle had a transaction here, so that's a volume imbalance. So after price traded into that and also a bearish order block, we saw a shift of market structure to the downside that created an imbalance here. Price returning to internal range, fair value gap, and then expanded to the downside, traded into that bullish order block of the breaker block. All right, remember when treating PDRAs or institutional reference points in their order of importance, we like to put more attention to the mitigation block. After the mitigation block comes the breaker block. So this is very important. Price traded into it, took out sell liquidity here, traded into the bullish order block within the breaker block, then expanded to the upside. All right, so what happened, this was on Friday. Okay, so price actually traded into internal range fair value gap right here. This is it. I had marked it out. You can see that internal range fair value gap. Okay, price traded into it, and then gave us a shift of market structure on the 1 hour time frame, and it started to sell. All right, this will have been this should take liquidity below this low, which is sell liquidity, or we might see a smart money divergence, which we are currently seeing. The inability of the dollar to form lower low while foreign currencies are forming higher high. GBPUSD had formed higher high, but the dollar is not forming lower low, and so this truly might be smart money divergence, and we might start to see the dollar rally into these inefficiencies, the old high and the inefficiency here, which is drawn liquidity, and ultimately that weekly buy side liquidity above here and the sell side imbalance, buy side inefficiency. All right, so let's go to the 1 hour time frame and see how I would have approached the market. Okay, so when this week began, we were expecting to see a gap open lower or higher to confirm that we're going to go bearish or bullish, and then fortunate enough this week we had a gap opening lower, which tells us that we are going to go bearish. We are going to have a bearish week. So the gap open lower. Then what are we supposed to do? We are looking to sell in London or New York session, and we are looking to see price form the high of the week either on Monday, Tuesday, and Wednesday. Fortunate enough, price formed the high of the week on Monday. All right, so what happened? Look at what happened on the 1 hour time frame. This was the gap open lower. Price went into consolidation or time distortion, because this is not a very good session for trading. And then immediately it was London session, which was 7 a.m. GMT plus 1. Price swept liquidity above Asia. Look at this. Price swept liquidity above Asian range. Okay, price swept liquidity above Asian range, and then we had a shift of market structure bearish right here where the body of the candle closed to the downside. This large or a huge bearish engulfing candle that closed below that low. Okay, we have a lower low, then price formed the higher high, then we had a shift of market structure, so more like this is a breaker block. Okay, this last bullish order block here, the bearish candle that was traded through by this bullish candle is a bullish order block. All right, so it was violated here. This now serves as our bearish breaker. You can see that that's a breaker block. Okay, that's a breaker block. So we are looking to see price returning to that breaker or internal range fair value another block. So but as you can see, we didn't have any fair value gap there except for implied fair value gap. What is an implied fair value gap? Simply pick up your Fibonacci and measure 50% of the first candle week. Remember, fair value gaps are a 3-candle price action where the first candle and the third candle create an imbalance in between. They do not match up their price action. That's the fair value gap. I'm using literal words to explain so that some of you are not going to get confused with what we're doing. Alright, so that's the first point, the 50% of this entire candle week. Remember, only the candle week. Okay, then 50% of the third candle week, the high to the low here. Zoom and do just 50% of the candle week. That's an impaired fair value gap. Alright, that's an impaired fair value gap. So I'm going to do 50% of 4. Okay, that's the candle. this is the candle. Look at what I'm doing. First candle, second candle, this is the third candle. So if you measure the high to the low, 50% of that candle, this is it, and that is our implied fair value gap. All right. So in the 1 hour, we have an implied fair value gap and a breaker block. So price traded into that implied fair value gap. Look at the precision. Price traded into it, tapped into it, and started to go down. It started to pull down. All right. Started to pull down. So where is it heading for? We already outlined at the beginning of the week that we were looking to see price trade into this mitigation block to either form the low of the week around this mitigation block before it started going up, or it starts going up. Okay, so price traded into that level as a Tuesday. All right, so let's look at what happened. On Monday, price expanded. Then on Tuesday, we still saw a gap open lower, telling us that we are going bearish. All right, but we need to see price at least trade into this gap, fill up this gap, or just tap into the gap, most preferably 50% of the gap, which is consequent encroachment. Okay, if you use a Fibonacci between the low to the high of the gap, this is it. Let's see. Between the low to the high of the gap, it's called consequent encroachment. So if you measure it, yeah, so let's use Fibonacci to measure this entire gap, and then take note of 50% of the gap. 50% of the gap. So 50% of that gap is consequent encroachment. Most preferably, we would like to see dollar trading 50% of that gap, okay, before it starts selling, or tap into the gap. All right. So I've heard students ask questions like, when do we know a fair value gap has been filled? Most students would like to see it completely being filled, but no. All right, it doesn't have to be filled completely or entirely. Once it is tapped into, it qualifies for price action to move further. All right, so price lingered for some time. Then on Wednesday, price traded into that volume imbalance. That gap right here. That gap on Tuesday, the Tuesday midnight opening gap, and then price crashed to the downside. All right, look at what happened after price traded into that level. What do we see? We wait for a shift of market structure. Price broke structure right here. Where will we be entering? At a fair value gap, or at a discount, at a premium fair value gap or order block. Look at the fair value gap right here. Institutions traded into it, tapped into it, and then started going down, and they traded right down into what? The sell side liquidity residing below this low. Okay, this low here, this low. All right, so Monday, Tuesdays, Wednesday. Monday formed the high of the week. Tuesdays, Wednesday, and Thursday we had a bearish week. Today is Friday. Of course, it's typical that we see a reversal. All right, it's called end of week reversal, either Thursdays or Fridays. That's when we expect to see the end of week reversal. So today's price action, price formed the low yesterday. Then today, price took out that low in Asia. We had a shift of market structure in early hours of today, all right before the London opened. Then in London, price traded into that fair value gap. So you can see that the model I'm teaching is very specific. Wait for price to trade into a significant point of interest, especially on the higher time frame. Wait to see a shift or break of market structure on the 1 hour. Then you are looking to execute your trades on fair value gaps or order block. It's very specific. Price traded into it here, and look at what happened. So throughout this week, we'll have had only 3 entries in my opinion. Okay, the first is here, the first is right here, the second is right here, the third is right here, and that's all. All right, so let's go to the 15 minutes time frame and see if we have something interesting. So the 15 minutes time frame, so you see how I do my top down analysis: weekly, daily, 1 hour, 15 minutes, and that's all. All right, so on the 15 minutes, price traded into, after the shift of market structure, this is a fair value gap, price traded into it. I will have been selling here with my stop loss above this high. All right, my stop loss above this high. And then look at this, price traded down. Where is our second entry? After price, immediately price trades below this low, you should be taking partials. This sells liquidity here. You should be taking partials, or if you are working with a trading plan, once you have 40-50 pips in a day trading, you get out of the market. All right, so on Tuesday you can see it again here. After price traded into that level, after our 1 hour shift of market structure, price traded into that, our 1 hour fair value, you'll have been executing here. Your stop loss is above that high. You can see this high, it's literally less than 20 pips. So where is your profit target? Below this low is sell side liquidity. That will have been your immediate profit where to take partials. You have been taking partials below here. All right, so price traded into it, traded into other block, expanded again, traded into fair value, expanded into that our sell side liquidity we outlined. And this is today's price action. Where will we be looking to take profit? Price immediately price trades into this high, you should be taking profit. So you can see this is very easy to do, guys. Very easy. It will require patience, but if you are patient enough, you're going to enjoy what you see on the market. All right, so guys, this is what has happened during the week on the dollar, and just go to your foreign currency and analyze it, see what's really happening on that very pair you are trading. So let's just do GBPUSD briefly. So since we had a bearish week, we should expect a bullish week on GBPUSD, right? GBPUSD 1 hour time frame. So this week, so this was when is Friday? Okay. So this is Monday. Yes, I saw that. So this is the GBPUSD chart. All right, many of you wouldn't have really seen this, but as at the time the dollar took out that highs to form the high of the week, the pound dollar took out relative equal low here. If you can see, the body of the candle is very equal. I outlined these things right from on Monday. Price traded below it. There is a tiny fair value gap here on the 15 minutes time frame. Let me show you. Right, top down analysis is very interesting. So look at what price action did. Price took out relative equal lows here, sell side liquidity residing below here, then traded into a tiny fair value gap right here. I think that should be 5 minutes then. That should be 5 minutes. All right, so you can see this, right? 5 minutes time frame. Look at this tiny fair value gap. That's where the institutions traded into right here. Traded into that tiny fair value gap with another block. So it's another block that has a fair value gap. Remember, the most valid other block is the one that has a fair value gap attached to it. And then we had an expansion to the upside that gave us a shift of market structure. Where are we looking to enter? We are looking to enter at a discount, PDRA, or fair value gap. So high to the low using your Fibonacci, 50% is here, below 50% is this fair value gap. Right, so if you go to the 1 hour, it's very clear, no confusion, you know what you are looking for on the 1 hour time frame. So this is it on the 1 hour time frame. Price took out the low. We now had a shift of market structure right here, where this green candle closed above that last high. That's the shift of market structure. It created a bullish order block. So you will have been buying around this level. Just mark the other block, immediately price trades into the other block. You buy from it using lower time frame confirmatory entry, 5 minutes break of structure, return to other block, or return to internal range fair value gap. If you are struggling to understand these things I'm mentioning, the fair value, the internal range, the liquidity, just take your time, go through the channel. You are going to find interesting videos that are going to educate you on everything you hear me mention on this video. All right, and maybe you can also just want to join my VIP mentorship community so that you get full access to my full recorded lessons, my course, institutional trading course, and then get access to my VIP mentorship community. So price traded into this level and started to expand to the upside. So where is our profit partial? This buy-side liquidity is setting above that high, price traded into it, you should be taking profit. All right, then on Tuesday, look at what happened. Price traded into that internal range. So if you study this was a low resistance liquidity run. Price formed a low, another higher low, right? Took out the high, then went back into that level on Thursday here. Remember I said we'll just be looking for 2 trades this week using the dollar as our director. So on that Thursday, this will have been another entry. Okay, price swept all of these lows, traded into this level, this other block. You should be looking to buy using lower time frame confirmatory entry. All right, then price took out this high. That's your partial or profit target, that high right there. All right, so how did I buy around this level? I think I bought this yesterday or something using a 1 minute. Was it a 1 minute time frame entry? Yeah, I think so. If it's not 1 minute, it should be 5 minutes or something. Should be. So price traded into that level, and then we had a shift of market structure. Right, in the early hours of London session, we had that shift of market structure. Then in London, price retraced into what? Internal range, which is our fair value gap right here, or you can call it this fair value gap, but price didn't even get to that fair value gap, so you will have missed this entry. All right, I think I took my entry somewhere around here very early, right from when price was in Asia. That was when I took the entry using a 1 minute time frame, shift of market structure, return to other block. I just took the buy and let it run. In London, price was already running. Okay, so if you are not very good enough, you may not find an entry here around London. It was very fast. And reason is because of the banking crisis we've been having throughout the week. So we've not had a specific price has not given us specific levels on foreign currencies to execute trades. Very, very rare. So you can see here, you'll have been looking to buy in this fair value gap. Price never went for the fair value gap. Okay, so but if you use implied fair value gap, 50% of this and 50% of this candle, that's impaired fair value gap, price traded into it. Look at how price action went up. All right, so today I think I took a short on GBPUSD. Price took out the highs here. So what we had here was price took out the high, and because I know this is end of week reversal, so I know that we should be seeing shorts today. Price took out the high, price gave us a shift of market structure. All right, the highs here, price formed a low, lower high, lower low, then shift of market structure right here. Price broke structure. I went in short when price returned into this fair value gap right here. I went short and I took profit. Immediately price expanded below this relative equal lows here. I just took profit because it's Friday, so I have very little expectation. All right, so price has expanded, created another fair value right here. I had already outlined 50% of the fair value. Price went into that bearish order block and fair value gap. So if you just go to the 1 minute time frame, you should see that entry on the 1 minute time frame. So you can see on the 1 minute time frame, price broke structure, but price never returned to your entry. So you will have missed this again. So guys, take our time to watch this, jot down the lessons, and we're going to see tomorrow. Okay, you're going to get my next video on next week commentary, maybe tomorrow on Sundays. All right, so guys, if you like this video, quickly click the like button, hit the notification bell, subscribe to this channel, drop your comments, let me know what you think, and let me know if there's any topic you'd like me to record on. Don't worry, drop it in the comment section. And don't forget, please, you can join my free Telegram community. Just go to the description of the video, join my free Telegram community. Until next time, I wish you good luck, good trading.